IBD's relative strength line, also known as the RS line, is one of the most effective indicators investors can use when looking for excellent breakout stocks. Another tool with a similar name, the RS rating, is also a key indicator investors should pay close attention to before buying a stock. Despite sharing a similar name, these two indicators are actually different, and it's important that investors discern between the two before buying a stock. Is one more important than the other? Which should investors give more weight to? And what do we do when a stock has an RS line at new highs, but the RS rating is lagging, or vice versa? Here to explain is IBD's head of market research, Justin Nielsen.
This was one of the things that would sometimes confuse folks, right? When they looked at these two things and they seem to not match. So the relative strength rating, keep in mind, this is a rating, it's a proprietary rating that we have that is comparing that particular stock's performance over the last year to all the other stocks in our database, all the other equities. So we've got, and that includes ETFs, everything, 10,000 equities basically. That's what the relative strength rating is of 99. That number is telling you basically where is it in the percentile. So 99 being the highest, meaning that it's beating 99% of all the other stocks out there. If it were at 1, it would mean that 99% of the stocks are beating it in terms of the 1-year performance. Now, the line, by contrast, is really simply a ratio of the performance of that particular stock versus the S&P 500 index. Now, in Market Surge, you do have the ability to change whether you're using the S&P 500, the NASDAQ composite, you could use the industry group, but the default is the S&P 500. So you're really kind of just getting a gauge of how is the relative strength of that particular stock versus the S&P 500. And again, it's a simple ratio. So you're seeing it on a daily or weekly basis, whichever chart you're looking at. And you can kind of see, okay, if it's going up, that means that the stock outperformed the S&P 500. If it's going down, that means the S&P 500 outperformed the stock. So very, very simple in that regard. How you use them? Well, I'm usually using the relative strength rating for kind of helping me focus in on the stocks that I want to buy. But I will note that this can be very, very slow to move when you have something that has had a phenomenal move and then it doesn't do much, or even if it goes down. One of the examples I use is Qualcomm. Qualcomm back in 1999 had a 2,000% move, in a year. And it, of course, had a relative strength rating of 99. And even when it was down 40% off its highs, well, guess what? That still meant it was up over 1,000% for the year. So it still had a 99 rating at that time. So this rating can be very slow to move on the downside because you can have a very good performance even when you're down a lot more in recent months. And so in that regard, we can use a relative strength of a 3-month, rating, a 6-month rating. All of these are also available in Market Surge to kind of give you a little bit more clarity in what's happening with the relative strength rating right now. But in terms of that line, again, that's just a simple ratio. It's not even proprietary. You can do it in Excel, to be honest with you. You just do that ratio and chart it out. But it can be very valuable in telling you, hey, is this worth taking a single stock risk on this particular stock, or would I be just as, do just as well being in the S&P 500 with a lot more diversity? So that relative strength line is very useful in that regard. And we do note that many of the leaders have their relative strength lines going into new high ground at the same time or before the price does. And that's really one of those signature aspects of a leader. So both are very good for kind of deciding what stocks to buy.
So, when you're looking for breakout stocks, a handy thing to do is screen for stocks with an RS rating of 80 or higher. That'll give you a list of stocks that are showing solid relative strength. Then, to time your buys, look for the ones that have an RS line at or near new highs as they're working on bases or breaking out.